So let's just get directly into directional trends. So we have just considered trading ranges in which successive peaks and troughs occur at roughly the same price levels. This results in a flat or sideways trend in prices whenever reversal points are occurring at lower levels than the previous reversal points. Price is trending upward or downward. What is a directional trend? When a peak and trough occur at higher price levels than the immediately previous peak and trough, the trend has turned upward. Conversely, for a peak and trough lower than their previous peak and trough, the trend has turned down. The angle of the trend therefore is determined by the amount of which the peak and trough are higher or lower than their previous levels. To see this more clearly, a chart is almost necessary, so let's get back. Okay, so these peaks were broken by this peak, so this is currently uptrend. When this the trough gets broken by another trough in here like this, then it will be a downtrend. Quite obviously, the steeper the angle of the trend, the more powerful is the buyer or seller group. It means that the one group is overwhelming the other group at a faster pace. In a decline, sellers are willing to receive lower and lower prices before becoming temporarily exhausted at a trough. In an advance, buyers are more and more anxious and willing to pay higher prices. This is the time when an investor who is long the security is happiest. It is trend and is what the technician is looking for in an indicator and charts. The corollary, however, is steeper the angle of the ascent or descent, the less switchable it becomes. An uptrend therefore is display of eagerness of buyers versus the eagerness of sellers. It is a similar concept of support and resistance, except that the support and resistance are changing in specific direction. Because all the stock desired by the buyers and sold by the sellers is not transacted at one time and one price level, but over a time as news leaks out and positive feedback, negative feedback affects the players. The price trend continues until it has reached a point of exhaustion. At that level, the price trend either flattens out in a congestion or a consolidation area or reverses direction into a declining trend. Some analysts argue that an actual trend lasts only a short time, approximately 20% of the trading period, and during the remaining time, prices remain in a consolidation of pattern formation with an indefinite trend. No one has demonstrated the validity of this percentage. However, it was estimated only by counting the time that an EDX indicator shows that a trend exists in varying markets, periods and circumstances. It is undeniable, however, that the majority of profits come from correctly anticipating and acting upon a trend. For this reason, almost all technical studies devoted toward early anticipation of a trend. So in next we will study how is uptrend spotted with different lines and regression lines and other things. So we will stop here by today. Thank you for joining.